The market's interpreting Friday's softer than expected jobs report as giving the Fed the green light to cut interest rates later this month. Joining us right now on set to talk about the markets and what he's seeing is Lee Cooperman. He's the chairman and CEO of Omega Family Office. And Lee, welcome. Thank you for being with us this morning. It's good to see you.
Nice to have me.
Well, you've been looking at all of this and been pretty skeptical for a while that the market could continue. I know you've done well because your individual stock picks have done well. What are you thinking about the broader markets at this point? I
think the broader market is heading for trouble. You know, it is extremely overvalued relative to its own history. It's about 98th percentile valuation. And lots of issues that have to be dealt with. We have no leadership in Washington, no agreement among the two parties. We have radical left, radical right, which I think are hurting the country. And we have to get along. We have to work together to deal with our problems. And it's not being done. And every day the debt goes up and goes up. Nobody's focusing on it.
Obviously, the market can stay illogical a lot longer than people can stay liquid in some points. And betting against it, betting against it can be a really tough thing, too, because even if it doesn't make sense, it can keep climbing.
I'm up about 15% this year.
I'm sorry, how much?
15,
15, okay.
I think that's a little bit better than the S&P, better than NASDAQ, better than the Dow. And I'm not short much of anything. Other than I'm short the index. I think last time I was on, I had a structural short on above 6,500 in the S&P. And there's a chance we'll get above that. I would not have thought that 3 months ago. But we've had very good
Do you still have a structural short above 6,500, or have you changed?
Yeah, well, we moved it up to about 66, 6,700.
Okay.
I'll make money on my short volatility spreads up to 6,700. I think that the stock picking is what saved us this year. Mr. Cooper's been our best holding. That's been a huge winner. And we've had some of the data center companies like David Cody's company. And we've had MP Materials and the rare earths. So we've had a few of the big winners. And a lot of value stocks.
Is it harder and harder to find stocks that you think are value stocks at these levels, though?
As the market goes up and broaden out, absolutely. Definitely.
So what do? You still have conviction in Mr. Cooper, even with the stock's gains that it's seen?
Well, they had the brilliant move to merge with Dan Gilbert's company, Rocket Mortgage. And we think they're going to be a world-class company being created out of the merger of the two entities. So we think the stock can achieve a significantly higher multiple and can get into the 200 area, 210, 220, 230, 240, currently around 180 something.
What do you think are the risks for this market? You think it's really overvalued, but it usually takes an event to bring down a market.
Yeah, it's going to take either AI being discredited, or maybe showing not to be that economic, or a recession. It doesn't look like a recession is in the cards near term. The economy is slowing, but I think that with every third word on TV being AI, if you have a contrarian bone in your body, you have to be a little concerned about AI being over-promoted.
But AI is something that you're betting on, too, with the data centers that you've been placing.
Yeah, small bet. And we also got it at much lower prices. We're not a buyer of Vertiv now. We are in a decent-sized position, but it's up fivefold from when we bought it. We had a very high regard for David Cody, and we still do.
The question with AI, though, and I guess I wonder if this gets back to... you think that this is going to play out like the dot-com bubble did? Because these companies are so different. So many of them have not just revenue, but massive amounts of profit that are coming through. You're still seeing massive amounts of spending that come from the big companies, the big tech companies, placing bets on
They're not going to fail.
Yeah.
I think that, look, I came into the world from college. I went to work for Xerox Corporation. Mm-hmm. So I understand technology, a double-edged sword. somebody else's innovation, somebody's obsolescence. Xerox was on top because they might have been photocopy out of business. And the Japanese did a number on Xerox by coming in with low-cost products. So I think that the odds favor something going wrong, that they won't be as good as people expect.
The AI results won't be as good as people expect.
The return on investment.
We have seen job hiring under pressure, I think, in part from AI already.
You want to be a plumber, a roofer, or a carpenter these days. You don't want to be a business executive. I read somewhere where 25% of the Harvard Business School class is unemployed.
You mean the class that just graduated, 2025?
Yeah.
You know, there's been a bunch of headlines about that class, about Stanford, Stanford engineers who are working at Chipotle. I mean, it's a remarkable thing to think about what happens to the economy if AI. But that's if AI accelerates it. So there's sort of this dichotomy. My question is, when is the moment on the sort of AI build out where, to the extent that these companies are not going to be capturing the cash that they're expecting, what is the inflection point?
Well, they miss. I mean, NVIDIA is not making new highs. NVIDIA has been retracing its move. And I think that the market will figure it out well before the analysts figure it out. You know, I tell my guy who's nervous about all these holdings that the stocks will be down 15 or 20% before you have revised any earnings estimate. That's the way it usually works. You know, with your permission, I'd like to read something Warren Buffett wrote in 1999. And he is as smart as they come. And he says, God's plan, this was comments he made at a conference in November of 1999, is once a bull market gets underway, and once you reach the point where everybody has made money, no matter what the process was followed, a crowd is attracted to the game, is responding not to interest rates and profits, but simply to the fact that it seems to be a mistake to be out of stocks. Okay? These people superimpose on the I cannot miss fundamental factor, and on top of that, fundamental factors, they have to drive to be in the market. Like Pavlov's dog, these investors, in quotes, learn that the best single place to be is stocks. And like Pavlov's dog, when the exchange opens up at 9:30 and the bell rings, they're out feeding. And we're in a bull market, everybody's got a profit. And there's a God, and everybody becomes convinced there's a God, and that God wants to get them to be rich. It's not that way. There is a God, in my opinion, but I think he wants to spread it around. Not everybody's going to get rich.
Yeah.